Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, yesterday we had FOMC and it was pretty volatile, pretty standard in its movements. And I tell you guys, this is why Uncle Charles does not do predictions. Because those who do predictions, they get cooked. And they try to do predictions, they're going to get other people cooked. People who are dumb and foolish enough to believe their predictions. Uncle don't do predictions. I just identify the levels, the setups, so that we can trade it unbiasedly in real time. Let's take a look at what happened, okay? We had the standard chop before FOMC, standard stuff, and then this is when it got a little volatile when FOMC dropped. We had the 50-point basis. Guys, I had a lot of people predicting, like over 10 people predict what's going to happen. Only one of those 10 people got it right. Everybody said that was going to go down. One person said it was going to go up. 100% of you guys probably got cooked. Those who were bear biased, and I tell people to not be bear biased, do not do predictions, and they don't listen to Uncle Charles. Those who are bear biased, look, SPY is at over 570. You're probably extremely nervous right now because you chose to predict and you were so sure that the market was going to go down. But it's not. It goes up. The market humbles people that likes to predict the market. They love to humble people. Now, for those who are claim to be bullish, you guys probably got cooked as well. Even though the market is up, you guys probably got cooked as well. You guys were being bull biased, and what happened? When the data dropped, we had a big pop to the upside. SPY cleared my 565 level, hit my 566.5 target, going as high as 568.6 intraday. So if you traded this level to level, you would have been fine. But the moment Jay Powell speaks, and guys, the market has a tendency to, at 2 o'clock, it reacts a certain way. And then when Jay Powell speaks or after he speaks, the market tends to reverse. And that's exactly what happened. This is why I say trade with the traps level to level. There is no prediction. When we broke back below 565, it hit the next target at 563. Treated 565 as resistance, hit the next target at 563, broke down 563, hit the next target at 561.5, and then bounced. If you traded level to level, you would have been okay. Those who are predicting the market was going to go up probably got cooked when Jay Powell came and speak and the market started reversing. They started crying. That literally, when Jay Powell started speaking, look at that drop. Those who tried to predict, even if you got the overall direction correct, you see how crazy and wild the market can be? Those who tried to predict and were so sure of themselves were screwed. I know the majority were screwed. Whether you believe it went up or down, you got screwed. The best way to trade this market is unbiasedly like a sheep, level to level. Because look what happened. Anyways, we're bullish. Apparently, we get in the gap up. A lot of time when market puts in bottom this year, it's been gap ups and false breakdowns. And when we put in the top, it's been gap downs. Right now, the market's going for that gap up. All-time highs we are at, guys. 570.2, you guys can see it say in the pre-market. As long as above 565, that is the most critical support right now. I am overall bullish on the SPY, even if we pull back, okay? As long as above 565, the next critical target is all the way up at 578 based on fib levels, okay? So as far as support goes, support is at 570, okay? 568, 566.5, and then the big one at 565. If 565 fails, we're going to get a much bigger pullback. As long as above 570 and 565 lows, 578 is the target. Next resistance, we're going to do it by $2 increments. 572, 574, 576, and 578. Why? Because we are in uncharted territory. So that is the plan for the SPY. Triple Q gapping up as well. It's around 481.2ish. The next critical level is all the way at, let me go to the daily chart actually. The next critical fib level is at 482, as you guys can see, okay? That level must clear for more upside, 44, 46 plus. If it's pullback time, then 480 must fail first, and then 477, 475.5, and 474. Below 474, I would be bear bias. Above 474, I am bull bias. But clear 482 should trigger more upside. NVDA is around 117. It's just been, wait a minute. It has been chopping. You know, it was a nice clean pullback, but it's gapping up this morning. So once again, 118 and 120 must clear to put in a bottom. To put in a higher low, it got to clear those levels. 118, 120 clears, guys. Look to long 121.8 and 125 as targets. Now, if you drop back below 118, dead cat, bounce, or gapping crap, whatever you want to call it, 114 or lower is back in play. Tesla, going for the gap up as well, as you guys can see. Next resistance are 235 and the critical fib level at 237. If Tesla wants more upside, those levels must clear for 240 or higher. If it's pullback time, if this is a gap and crap, then 233.5, 232, and 230 must fail, especially 230, to put 226.5 in play. And below 226.5 is when I would switch back to bear buys. Otherwise, it's still it's looking kind of bullish. And we'll look at IWM, 226.2 is as I'm recording this in the pre-market. So next resistance at 228. That is a fib level. And if it clears 230, 232 plus, all the way up to 236 would be targets. If it's pullback time, then support at 226 and 224.5 must fail. If those levels fail, 222, 219.7-ish, 218, and 216.7 would all be in play, guys. All right, let's take a look at some dark pool levels before we end the video. Let's take a look at yesterday's dark pool. What did they got for us? So around 562.9, 3.1 billion in premium. That's a lot. 562.9, guys. It's close to my 563 level. Triple Q 473.44. That's 51% of activity. The other was at 471.44. All right, NVDA, majority activity came in at 113.3. Add these levels to your charts, guys. I have to pay for these. Tesla, 227.2. I do have a support level around 227. That's cool. And IWM, 219. All right, 219.15. Let's take a look at the flows. Now, guys, if you got access to this yourself, you guys will be able to mess with the filters as any way you want. You get create more creative. But what I do is 100K premiums above. I'm looking at above the ask, sweep orders, and out the money. Okay, I'm looking at the most aggressive ones. And it's overall bearish. Despite everything that's going on, a lot of these puts are being cooked. They had a few calls, though. 470 strike price, 565 second for October 18th. Hey, they're good. But a lot of these puts are cooked. Okay, guys, unless there's a big drop today, a lot of these puts are going to lose. And, you know, like I said, you see a lot of people buying these type of puts. You got to remember, there's also people selling them. So while there's somebody, hey, it's a good time to buy puts, somebody's thinking it's a good time to sell them. This is why we got to combine it with price action. And also, you see all these puts, more people to hurt. You know what I mean? The market makers, they want to hurt people. So majority is going to puts, like 17.8 mil going to puts compared to 1.4. Holy crap. Think about it. Unless these people are adding in on this bounce up. These all came in yesterday, so it wouldn't make sense. So yeah, 17.8 million in puts. Way lopsided. So the market makers could be wanting to squeeze them all out. Triple Q, it's bullish. Based on my filter, Triple Q is a bullish. So these guys are making money. They allow the majority to win on Triple Q, I guess. Yeah, I mean, a $10 gap up right now. That's a lot. Yeah, bullish. Hey, the flow on Triple Q was correct. Amazing. NVDA bullish. A lot of these are September 20th strike price are expiring tomorrow and one next week. The one put is for next month, October 11th, and this one's September 27th. Still seeing the edge going into calls for NVDA, guys. And last but not least, IWM. And it's bearish as well. 3.7 mil going into puts compared to 1.4. Wow. So a lot of these puts are getting cooked, but although these puts November 15, November 15, could they be hedges? I mean, like we combine it with the price action. I mean, they're getting cooked really bad right now. All right, guys. So this goes to show you, you can't just trade copying what you see on the flows. You got to combine it with price action. And always remember, while there are people buying it, there's also people selling it. That's why we got to combine with price action, because price action tells the story. Okay, guys? So thank you guys so much for watching. Peace.